Hello everybody, and welcome to this webinar on biodiversity and ecosystem risk for business. I would like to begin by acknowledging the traditional owners of the lands from which we're broadcasting today and their elders past, present and emerging of all the nations across the continent from where each of us is attending. I'd like in particular to welcome and acknowledge any Aboriginal and Torres Strait Islander people who are joining us today. I'm personally privileged to live and work on Ngunnawal and Ngambri country in Canberra and the surrounding regions, and I'm deeply mindful that the heritage of this place where I live, the woodlands and grasslands, rivers and special places, and all of the species that live here. This heritage is the legacy of the deep care and custodianship that has been shown by traditional owners since the dawn of time, and that continues to be exercised to the present day and will be for all the generations to come. My name is Rachel Morgan, and I'm the Knowledge Broker for the National Environmental Science Program's Threatened Species Recovery Hub. This is the first webinar in our Business and Biodiversity webinar series. It's jointly brought to you by the Threatened Species Recovery Hub and the Business Council for Sustainable Development Australia. The webinar series will run weekly for the next 4 weeks, and we have an amazing lineup of speakers both for you for today and for our next 3 webinars. So please, if you haven't already done so, take a look at our full program and register for the other webinars in our series when you get a chance. Before I introduce our keynote speakers, we'd like to welcome you all using a chat waterfall. And what we're going to do here is invite you to introduce yourselves using the chat function, which you'll find at the bottom center of your screen. By way of introduction, we're asking you to please let us know in the chat where you are at the moment, your location and what organisation you are from. So for those of you not familiar with Zoom, for most desktops and laptops, you'll find the chat button at the bottom centre of the screen, and it will bring up a chat panel on the right-hand side where you can type your response and see the response of others. Welcome Jessica Gees from the Indigenous Land and Sea Corporation. I see some of our speakers are introducing yourselves as well. Welcome many people from the various governments around the country. I can see now that most of the responses are going to panelists. So if you make sure that you adjust to send your messages to panelists and all attendees, that means others can see you logging in here. We have guests and friends from a wide range of businesses, from catchment management authorities and NRM groups, from research. It's good to have you all here. So in addition to the chat function, and we'll just let that roll a little bit longer, you should also see a button down the bottom for Q&A. Clicking on this button will bring up a panel where you can ask questions that later on we'll put to our speakers and panelists in our panel discussion during the second half of the webinar. And you'll also be able to see other people's questions. So we're expecting quite a few questions from our large audience, and we'll try to get to as many as possible. But please do go ahead and upvote any questions that you think are particularly important, and we'll prioritise getting to those. So we'll turn the chat off during the main speakers and the panelists. And I'd like to move now to introduce the first of our 2 keynote speakers. So it's with great pleasure that I introduce Professor Brendan Wintle. Brendan is a Professor of Conservation Ecology at the University of Melbourne and the Director of our Threatened Species Recovery Hub as part of the National Environmental Science Program. He has a love for quantitative methods that support conservation decision making, for species distribution models, for greater gliders and for the AFL tigers. And he's here to introduce our topic first by speaking on Extinction Crisis, Ecosystem Collapse and Nature-Based Solutions, why business should buy into biodiversity. Over to you, Brendan.
Thanks so much, Rachel. It's really great to be here. I'm kind of blown away that we've got so many great speakers and panelists and so many attendees. It's an incredible honour to be able to talk with you all this afternoon. I'm lucky enough myself to be sitting in northeast Victoria in Yatmatang country, and so I'd like to pay my respects to Yatmatang elders past, present and emerging, and I'd also like to acknowledge the fact that this amazing landscape that I'm able to sit in while I talk with you today is really amazing due to the custodianship for so long of the Yatmatang people. As Rachel said, my job is to start by painting a bit of a picture of ecosystem and biodiversity risk, and then try and develop a little bit of a sense of the opportunities and possibilities and the optimism. So please bear with me if you find the first part of my presentation a little bit grim. There will be some light at the end of the tunnel. So, ecosystem crisis, ecosystem collapse, sorry, extinction crisis. It all sounds very grim, doesn't it? About nearly 20 years ago, our Minister for the Environment, Minister Burke, made a promise to the Convention on Biological Diversity and to us and to future generations that by 2020, the extinction of known threatened species has been prevented and their conservation status, particularly those most in decline, has been improved and sustained. And that promise has been transcribed almost verbatim into the UN Sustainable Development Goals. These are just one of many promises that were made around the HE targets and the Sustainable Development Goals. And the one that I'm going to focus on today. So the big question really is, how are we doing? How are we doing against that goal of preventing any further extinctions? And incredibly, it wasn't really until about 4 years ago that we got properly organised as a planet of scientists and policy people and practitioners to try and really properly answer that question and paint that picture of how we're going against our promise and our aspirations for conserving biological diversity. The Intergovernmental Platform for Biodiversity and Ecosystem Services was developed. It comes under the UN Environment Programme. The platform is an incredible collaboration, a global collaboration of hundreds and hundreds of scientists, policy people, practitioners from across the planet, and they have been doing a range of different regional assessments and local assessments since about 2015, and their sort of flagship assessment came out a year and a half ago, and it was the IPBS, I'm going to call it now, or IPBES Global Assessment. And that was an amazing collaboration of scientists and policy people from across the planet to really try and paint a global picture of where we're at in terms of biodiversity and ecosystem services. So what did they find? They found, of course, that nature underpins all aspects of life. 2 billion people rely on wood as their primary energy. 4 billion rely primarily on natural medicines. 70% of all drugs are natural or copies of natural drugs. 75% of all crops are animal pollinated. Natural systems are the only carbon sink that can realistically tackle the incredible carbon sequestration challenge that we have in front of us. And of course, natural pollinators are incredibly important to our agricultural systems and to our ability to feed ourselves. And it's been estimated that they're worth in the order of $560 billion a year to the global economy, which is of course a big number, but really if we lose our natural pollinators, the global economy will be not something that we'll be most worried about. It'll be famine and it'll be global upheaval. So really, quite rightly, it's a very clear picture that the IPBES paints of the dependence that we have on nature for our way of life and indeed our existence. But the capacity of nature to deliver these kinds of services is declining everywhere. Here's a bit of a headline story for a couple of key ecosystem services. You can see here, I'm going to help you read this plot. Nature's contribution to people is that first column, and the rows represent particular contributions that nature makes to our world, that makes our world livable. So let's just go to number 2 here. You can see that pollination and dispersal of seeds and other propagules, the 50-year global trend. If you're at the left-hand side of this global trend, it means that over 50 years, we've seen a dramatic decrease in the capacity of nature to deliver this service. If it's a dark blue button, it means that this trend is well established. And if it's a downward pointing white arrow, it means that this trend is continuing strongly. And these donuts over here, if they're circles, they indicate that this is a thoroughly universal trend. So basically the capacity of nature to deliver pollination and dispersal of seeds and other propagules has dramatically declined. It continues to decline. And an indicator of that is the extent or the pollinator diversity and the extent of natural habitat in agricultural areas. And you can see here that for a range of these key ecosystem services, the regulation of climate, the regulation of ocean acidification, fresh water, all of these things have declined dramatically over 50 years, and they continue to decline on the whole. Here's one down the bottom that might be of particular interest to everyone at the moment. Nature's ability to regulate detrimental organisms and biological processes has declined dramatically over 50 years and continues to decline. And we can see here that the diversity of competent hosts of vector-borne diseases is a key indicator of that decline. Another key element of the IPBES report is the documentation of the trends, the status and trends in biodiversity. And you've probably heard a headline indicated that there are over 1 million species at risk of extinction, imminent risk of extinction. That was a calculation that was born out of the IPBES, and that came by looking at what the background rates and background threats to species are at the moment. You can see here a really important plot that actually derives from a long-term piece of work by the International Union for the Conservation of Nature. It was presented in the IPBES report, and that shows you the extinction rates that we've observed in key biological groups of animals since the 1500s. And here's the key thing. This little grey wedge down here represents the proportion of species that we would have expected to have gone extinct since the 1500s under ancient conditions. It's what we call the background extinction rate, because species just do go extinct naturally as part of evolution and as part of global change. But you can see here that we've observed dramatic increases in extinctions of key groups. We've lost 2.5% of amphibians just since the 1900s, which puts us at least 10 to 100 times above the background extinction rate, recognising that this is the background extinction rate for all animals. And you can see here that that trend plays out for mammals, birds, reptiles and fishes. It's an incredibly dramatic and stark finding, just in case you were wondering if we were in fact in an extinction crisis. And this is why ecologists talk about the extinction crisis, where we're seeing 100 to 1,000 times the background extinction rate. In Australia, of course, we've seen incredible extinction in a really short time, especially in post-European history. You can see here there's a couple of species. This is the Christmas Island pipistrelle, Christmas Island forest skink, the brambleKey melames. These are species mammals that we've lost recently. That funny noise that you just heard is the last call that was ever recorded for the Christmas Island pipistrelle just before it went extinct, and thanks to Zoos Victoria for that rather heartrending call. Since Europeans arrived in Australia, we've had 100 confirmed extinctions of animals and plants. Over 1,800 species are now listed as at high risk of extinction, and 35% of all global mammal extinctions have occurred in Australia since the 1500s. The really quite disturbing thing about our extinction track record is that it's linear and upwards. So here you can see the cumulative increase in extinctions since 1790. And this data were put together by John Winarski and colleagues, and it just shows you that we're on a pretty much linear increase in extinctions. We're not seeing a flattening of that curve, which we would have hoped. And if we were if we were living up to our CBD promises to prevent any further extinctions in this country, then we would be seeing a flattening of that curve. Unfortunately, it's linear upwards, and there are a bunch of other species we think are going to join that curve fairly soon. But it's not just about extinction, it's also about what's happening generally in the environment to animals and plants. So Elisa Bayraktarov from the Threatened Species Recovery Hub at the University of Queensland, now based at Griffith, she pulled together the Australian Threatened Species Index. This is the index for birds, and what it shows is that in 1985, if we standardise the abundance of all threatened birds at 1985 to be 1, then since then we've seen about a 50% decline on average in the abundance of threatened bird species. So since I gave my first lecture here at the Heathcote Primary School to my dad back in 1985, since then we've lost on average 50% of the abundance of all of these threatened bird species. And that trend plays out globally across all species, between 50 and 60% decline in the average abundance of all species. These here are data published in the WWF Global Report, a really important read. We'll get you the reference for that after if you want it. So what are the drivers of this degradation, this environmental degradation? Well, the global drivers are figures like this. 75% of the land area is significantly altered since the 1700s. 66% of ocean area is experiencing cumulative impacts. 85% of all wetlands have been lost since the 1700s. This is a gobsmacking statistic. 85% of all wetlands lost. Half of the live coral on coral reefs has been lost since the 1870s. We've got marine plastic pollution in almost every part of the ocean, and we've lost 32 million hectares of primary or recovering tropical rainforest between 2010 and 2015. Gobsmacking statistics, then that's what's driving the global decline in ecosystems and species. It's the same here in Australia. Habitat loss, introduced species that are causing incredible damage, and now we're faced with climate extremes that are causing mass deaths of, for example, spectacled flying foxes and mass fish kills in the Nindi lakes, and incredible fires that we've observed in the last 12 months here in Australia. So it's not that surprising that the IPBES found that goals for conserving and sustainably using nature cannot be met under current trajectories. Only transformative change will allow goals to be met by 2030. That's the sort of headline finding of the IPBES. But this is not just a story, of greeny scientists being alarmist. The World Economic Forum now rates biodiversity loss and ecosystem collapse in the top 5 risks to the global economy. So here you can see this is a likelihood impact plot. So you don't want to be in this top right-hand corner. There's high likelihood events that are going to have a high impact. And so you can see that biodiversity and loss and ecosystem collapse is up there with failure to adapt to climate change, extreme weather events and natural disasters as key risks to the global economy, according to the World Economic Forum. This spread of infectious diseases over here might need to be upscaled, I think, in the next 2020 report, but we'll see what happens there. Okay, sorry about all that. It's not that bad. The reason we're here is because there's lots of opportunities, there's lots of ways that we can turn this around, and we want to talk about what role business can play in helping us deal with that, with this incredible challenge that we face. A key area of innovation and a key opportunity for me is the agricultural space in Australia. 60% of Australia's land mass is under some form of agriculture, and there's immense opportunities for us to introduce biodiversity-friendly, sustainable agricultural practices that are going to bring huge benefits to the conservation of biodiversity. Or said another way, if we can't get good outcomes on agricultural land, if that's 60% of the Australian continent, then we're toast. So it's not just that this is a good thing, this is something we have to do. And fortunately, I think that's really being recognised. There's a webinar on this that will feature Michelle Young and David Lindenmeyer in a week or two. Rachel will give us the proper date for that after this talk. But please come and hear those guys talk about the opportunities that sustainable agriculture can bring to biodiversity conservation. I think there's huge opportunities there. This is a really lovely story. It's just one example of the very many examples that I could have given about the opportunities and possibilities of agriculture and biodiversity working together. This is a bitten-friendly rice. It's an incredibly innovative scheme. It's bringing great benefits to a wonderful and threatened species, as well as market benefits for the people who are involved in growing bittern-friendly rice. One of my favourite stories at the moment is the story of the conservation and traditional land management in Gaini in Ngari Ngari country. This is a wonderful collaboration between the Nature Conservancy, a whole bunch of investors, the Ngari Ngari people, and it's about bringing sustainable agriculture, carbon farming, and traditional land management practices into this incredible wetland country that harbours some of Australia's most profound aggregations of wetland bird species and incredible country. So these kinds of big scale projects are really exciting, and I think really bold and brave types of ventures that we really need if we're going to turn the situation around for biodiversity in Australia. Another nature, I'm not here to just speak Nature Conservancy projects, but a collaboration with Kilter Rural and the Nature Conservancy is their water fund. It's an impact investment fund. It's a really innovative economic instrument. They buy and sell water at the right times, and through that program, they've been able to allocate 900 megalitres to wetland flows in the Murray-Darling Basin over the last couple of years. So really exciting prospects for impact investment. It's a really great example, and it's doing all the right things by this little Murray hardyhead here. Endangered freshwater fish. In a couple of weeks, if you join this webinar again, you'll get to hear from Sarah Beckersey from RMIT, who's got some exceptionally innovative ideas around nature-based solutions in cities. Biodiversity-sensitive urban design, I think, is an incredible opportunity, and we're already seeing a lot of smart investment in biodiversity-sensitive urban design development happening around Melbourne. And so it'll be great to hear Sarah talking about the opportunities there to bring nature into our cities for the benefit of us and for the benefit of nature. Of course, I could go on for way too long. I probably already have. So I'm going to finish just with a couple of lists. I think there are 7 big opportunities for business biodiversity. Touched on sustainable agriculture and biodiversity sensitive urban design, biodiversity carbon farming and carbon methodologies for fire in Northern Australia are already incredibly powerful opportunities for business and biodiversity to work together. We've known about the ecotourism opportunities for a long time, and there are these processes, these last 3 here, impact investment, certification and biodiversity markets, I think are the processes by which we can make these amazing on-ground things happen at scale to conserve biodiversity in this country. And of course, you don't get anything for nothing. There are immense benefits to business for biodiversity friendly business practices: market share, employee loyalty, reputation with your market, stakeholder relations, long-term viability, reduction in regulatory burden, and of course price premium. These are all really good reasons, I think, for us to be really optimistic about the relationship between business and biodiversity over the near future. Thanks very much for your time.
Thank you, Brendan, for giving us that sobering introduction. We'll move to questions and comments from Brendan again in the panel discussion later on. But for now, I'm going to introduce the second of our speakers, who actually for many in our audience probably needs no introduction. Sarah Barker is Head of Climate Risk Governance at MinterEllison and is regarded as one of the world's foremost experts on investment governance and corporate disclosure on climate change matters. Her expertise is sought across our region and globally by institutions from the Bank of England to the United Nations Principles for Responsible Investment. She teaches at multiple institutions to company directors here in Australia and in the UK. And today she's going to be speaking to us on biodiversity through a finance and liability lens. So welcome, Sarah.
Thanks very much. Now, in preparing for this session, talking to Brendan made a comment about his qualifications and about his base qualification as being caring for animals and plants. Now, my base qualification is not caring about animals and plants, not because that's the way I feel personally, but so much of my work as a corporate lawyer, as a company director, as an institutional investor, does involve interacting with others for whom, sure, biodiversity loss is all very sad, but at the end of the day, they see their responsibility primarily as the generation of financial wealth. So what I wanted to talk to you about today is biodiversity through that finance and liability lens, and to communicate actually the reason that we need to care about biodiversity loss and ecosystem health is purely financial and is also to do with liability and legal exposure. So I'll talk you through at a very high level. I'm not going to get into specifics for any particular industry as to why biodiversity presents a particular financial risk or opportunity, given the diversity of people on the call. And then very quickly talk to you about some new research going on about the different kinds of commercial litigation exposure involved for entities who do not adequately manage biodiversity related risks. So moving on to those financial risks associated with biodiversity, I really like this chart that was recently published by A4S, the Prince of Wales Accounting for Sustainability Project, where they summarised the relevance and the interdependency of biodiversity, ecosystem services, and business per se. So really, this is the beginning of what I see as a real trend towards economic institutions, prudential supervisors all around the world, starting to understand not only the microeconomic importance of biodiversity to individual businesses, but that macroeconomic systemic dependence of the global economy on biodiversity. So even in the last month, we have had a proliferation of significant reports coming out from, for example, A4S, from the Dutch Central Bank, from the OECD, that one was a bit earlier, from the Network for Greening of Financial Services, which is a coalition of 66 central banks and prudential supervisors around the world who've published a study into those systemic financial risks associated with biodiversity loss, environmental harms. And then finally down there, they've got the logo of the Sustainable Insurance Forum. That's a coalition of insurance industry regulators all around the world, including our own APRA. And in fact, the CIF is chaired by one of our APRA commissioners, Jeff Summerhayes, who've recently announced that biodiversity is one of only 3 priorities for their work program in the next 3 years. So if there was ever any doubt that biodiversity loss is an issue that is going to be one at the forefront of economics and of financial risk management going forwards, these reports are certainly putting paid to that. Not only do we have institutions starting to become very concerned about biodiversity loss, but we have institutional investors, mainstream institutional investors, not just environmental activists, governments becoming very concerned about the financial implications of biodiversity loss. Up there, I've got the logo of the PRI. That's the Principles for Responsible Investment. That represents signatories who are mainstream investors, pension funds, banks, insurance companies, asset managers, collectively worth 90 trillion with a tr US dollars worth of assets under management. And so when an organisation like that starts talking to its members about the potential financial risks embedded in their portfolio due to biodiversity loss, issues like water scarcity, deforestation, etc., then you can be sure that that pressure is going to be placed downstream by investors on their investee companies. From a government perspective, looking over to the UK, it doesn't seem that long ago that Brexit was the most high profile issue in the media. Remember that one? One of the consequences of Brexit will be that the UK is pulling out of the Common Agricultural Programme that prevails in the EU. And under that program, the EU makes payments to farmers based on the number of acreages or the area that they have under management. Upon Brexit, the UK is proposing to change that, change the way in which agricultural payments will be made to farmers in the UK, not based on their area of land, but based on the generation of public goods that can be established by those farmers. So things like restoration of wetlands and fresh water, biodiversity development, replanting, etc. So we're starting even to see that connection being made by government between the economic value of biodiversity regeneration that even warrants payments to farmers. It's that significant. In terms of the other end of the spectrum, the EU is currently considering whether or not to ban imports of Brazilian beef into the bloc on the basis of their concerns about the deforestation of the Amazon and the inability of the Bolsonaro government to get the fires in the Amazon and the clearing of the Amazon under control. So we're really starting to see these economic levers being pulled in relation to biodiversity and biodiversity loss. Similarly, the credit ratings agencies. So these are the institutions that basically determine how risky is debt of a particular company or of a particular project. And the credit rating that you get is directly relevant to how much it will cost you to borrow money. Now, Moody's, Fitch, Standard & Poor's, the large global ratings agencies have all in the last year come out and specifically said that issues like biodiversity loss, land use, deforestation, water scarcity, food insecurity, as well as climate change, are now material considerations that go into their research. And they're starting to integrate these environmental risks into their vanilla, bog standard quantitative credit ratings. And they've expressed particular concerns about sectors such as chemicals, metals and mining, agriculture, forestry, consumer products, transport infrastructure, pretty much across the board in terms of the potential for biodiversity loss going forwards to start becoming a material factor in their ratings and ratings downgrades. As a segue between financial risk and liability risk, regulatory and legal risk is one category of financial risk associated with biodiversity loss that business needs to take into account. But the message for this is that we're going far beyond liability risk based on direct environmental impacts, direct pollution, direct clearing of land, anything like that. Because biodiversity loss has evolved in itself to be a financial risk and opportunity, that enlivens the entire breadth of the commercial law at the disposal of entities that may suffer loss because of the diminution of the health of ecosystems. here I just wanted to flag and with full disclosure, plug a forthcoming report by the Commonwealth Climate and Law Initiative, of which I'm an executive director, where we have done a study for one of the European central banks on how liability may be a financial risk to financial institutions. And the general message from that is you do need to think about those areas of commercial law and think about potential causes of action, not just arising from the direct impact on the environment, but impacts arising from a corporate failure to adjust to trends associated with those impacts on the environment, and liability risks, for example, associated with misrepresenting corporate preparedness to be able to deal with threats, for example, to key input supplies. Now, for a lot of that work, we're looking over the horizon. We're actually projecting going forwards how these risks are likely to crystallise in a liability context. And in doing so, we're building on a lot of work that we have done previously in the climate change space in terms of the expansion of corporate law to claims that are catalysed by climate-related financial impacts. And so I've just picked out very briefly there a couple of the claims that you can see may arise associated with a loss of biodiversity in a corporate context. And I've used these three categories because they're pretty much the three largest areas of commercial litigation. Contract law, so we're looking at things like force majeure claims, which is the get out of jail free for unforeseeable acts of God clause that the lawyers chuck up the back of all the contracts. Increasingly, we're seeing claims arise and disputes arise where the contract is no longer able to be performed because of an interruption to the capacity to supply that can in turn be traced back to biodiversity impacts. Like, for example, issues that we've seen arising from the recent bushfires. And so there it is critical that the legal teams within your organisation really do understand these risks and so are able to allow for them, to respond for them, to allocate them efficiently when they're negotiating your contracts. Similarly, duties of boards and misleading disclosure. As we are seeing with climate change, there's a whole new area of exposure related to financial statement misrepresentation of the capacity of a business to respond to a threat associated with biodiversity. We've seen cases, for example, involving large diversified mining companies where permits have not been provided by governments in order to allow them to ship minerals away from a mine due to biodiversity concerns going through the Zambezi, etc., etc. So there are certainly precedents in that regard. And then finally, the emergence of negligence and nuisance claims, where third parties who suffer loss because of a company's mismanagement of natural resources are looking to sue for damages for those losses. So I suppose the core message of my bit of the presentation is that it's up to the lawyers to save the world again, and we're always happy to do so and happy to help. And at any time, please do feel free to give me a call or any of my colleagues there on the screen. We do specialise in looking at these issues through a commercial lens and talking the language that your board and C-suite do talk.
Great, thank you again, Sarah. That was awesome. And I think for those of us not working in the legal or business sector, it's always really eye-opening to hear these explanations of the vast range of ways that that businesses and the legal sector are coming to grips with biodiversity challenges and the challenges of to our ecosystems. And I want to remind everybody that there's a Q&A button at the bottom. Please use that if you have questions for our speakers. We'll get to those questions for our speakers and our panelists in just a moment. And do also use that to upvote the key questions that you really want to see if somebody's already asked the question that is burning in your mind. But as I said, we'll get to our full panel in the moment. For the time being, I'd like to actually now turn to introducing our panelists, who will help us with a conversation to reflect on what we've just heard and further elucidate some of these issues. So our panelists represent leaders in corporate sustainability and the integration of biodiversity into business decisions. Simon O'Connor has joined us, and he is the co-chair of the Australian Sustainable Finance Initiative and CEO of the Responsible Investment Association of Australasia. Kate McHugh is Corporate Responsibility Manager for Sustainable Growth at Suncorp. And Carl Obst is the Director of the Institute for the Development of Environmental Economic Accounting Group. In a moment, we'll be asking our speakers and panelists to pick up on your key questions. So as I said, please keep putting those up and upvoting those. But I'm going to just kick us off by putting some questions of our own to our speakers. So first to you, Simon. You are here representing both the Responsible Investment Association of Australasia and ASFI, the Australian Sustainable Finance Initiative. Could you please give us a brief introduction to those associations and let us know how they have each been working to account for biodiversity and ecosystem risk in recent times?
Sure, thank you, Rachel. No, great presentations, and I think it's not lawyers who are going to save the world, it's investors who are going to save the world, isn't it, Sarah? I'm sure we've got to. But I think what's really fascinating is I work with a broad cross-section of the investment community, from our superannuation funds, banks and insurers. And this is a conversation that has emerged because I think the data that Brendan has showed us, it should be absolutely frightening to every investor out there, because not only does nature underpin all life, nature underpins all of our economy and all of our businesses. And if we fail to understand it, we fail to understand what's going to drive the ultimate success of our investors. And so it's pleasing that this conversation is emerging in the investment sphere. And, I'm a reformed environmental economist, and so I've probably been spending much of the last 20 years doing valuation around this kind of stuff, and it's long overdue for investors to be thinking about this and understanding the interrelationship here. But I think the previous two presentations have done that really well for us. So I think we're getting closer to understanding, and I'm pleased that through the Australian Sustainable Finance Initiative, it's really become a core element of what we're trying to do with this cross-sectoral initiative that Sarah's involved in as well, where we have about 90 finance organisations coming together to understand how do they contribute constructively to delivering and playing their part in the delivery on the Paris Agreement and the SDGs. And as Brendan said, the SDGs fundamentally, well, there's at least 3 of them that very directly relate to the topic of today, but I'd say that's across all of them. And with that, we're seeing also this growing interest and commitments of investors to understanding, measuring and contributing to the positive achievement of the SDGs. And so as at today, of our top 50 super funds in Australia, you've got about 10 of them who have public commitments to contributing to the SDGs. And I think you will see a whole lot more coming through and start measuring that contribution. And ultimately where that's come from is that we're increasingly getting better at understanding how these externalities, how nature and weather and water and floods, how they're encroaching on and showing themselves to be very real impacts on our balance sheets, on our valuations, on our profit and loss statements, and feeding through to investment outcomes, lending outcomes, insurance outcomes. That's been really loud and clear through the climate change lens, but I think they're so intimately linked to our landscapes and biodiversity that I think it's becoming more and more clear. And so we are starting to see a more sophisticated conversation in the finance sector, but I would say we've still, to be quite frank, we still have our training wheels on here, because there's a lot we don't know. And I think what's going to be quite important out of ASFI is actually how we start navigating to ensure that investors and finance have the information, data and evidence that comes out of groups such as yours who are hosting this, and that actually finance and scientists are talking to each other, and that we can take some of that data and translate it into finance relevant, investment relevant data. And so I think that's really key, that really out of these kinds of programs, the kind of science that comes out of your areas of research, it's really clear that we have that underpinning natural capital accounting, that we can help feed into predictions and scenarios, that we can help define metrics and indices for natural capital and biodiversity, and ultimately that we can measure whether our capital flows, whether our flows of financial capital are eroding or contributing to the strengthening of the natural capital base that's going to be important to achieving the SDGs, and ultimately important to achieving strong investment outcomes for all Australians through their superannuation. And so the linkage is being made. I think the conversations need to come together in a much more sophisticated way. And, you know, that I think we're starting to see a kind of an earnestness from the finance sector to do that. And I guess, you know, if I just, final comment, you know, that for investors, this becomes increasingly real. And a nice little example of that is, you know, some of our members own the Brisbane airport, for example. And the Brisbane airport, you know, when I hear stats like 85% of wetlands are lost, and if I think of the mangroves and the importance of mangroves that sit around the Brisbane airport and the flood and inundation protection that come from those mangroves, and if you think of climate change scenarios around that, and that has led in the last few years to an additional runway being built on the Brisbane airport that is approximately 1.5 meters higher than the existing runway to account for all of that. And just, you know, there are real economic implications of if there was a loss of those mangroves in Moreton Bay and around that area, how real those are. And we're starting to bring those into valuations and into investment decisions and into cost benefit analysis frameworks. And so as much as we want to see bittern friendly rice, I think we should see mangrove friendly airports. And I think we can continue to extend that through many other parts of our investment portfolio. So I think it's the start of a really important conversation, and I'll end it there, Rachel.
Great, thank you, Simon. We'll come back to some of those points, but I'd like to turn to you now, Kate. So can you tell us, please, from your perspective in Suncorp, where does biodiversity and ecosystem risk intersect with your work and with the work of Suncorp through its roles in banking and insurance?
Thanks, Rachel. What hard acts to follow? I think the key thing for Suncorp is we're a bank and an insurance business, and so we have, and then we have an investment arm as well. So it's the intersection, I guess, with biodiversity and the ecosystem risk is for the bank in particular, it's understanding issues of productivity, natural capital, and Simon spoke really well to how do we take that data and the studies that we know as scientists and people who care about the environment and convert that into data and systems and frameworks to make decisions around who we can lend to. So a really good conversation that's happening around the carbon markets at the moment is the valuation of land and whether carbon farming is seen as taking a portion of the land and putting it aside so it's non-productive, which might impact on a positive valuation for a lending decision. So there's that element. And then the second element obviously is our insurance arm of our business and how biodiversity and ecosystems potentially create resilience towards natural hazard and potentially mitigate the risk of that. And then again, it's about connecting the ecosystem and the biodiversity benefits in a way that translates into numerical decisions for a business to be able to calculate risk, which is really tricky. So it's almost like translating what, and as someone with an environmental science degree and business experience and a whole bunch of other stuff, it's about translating all of that information so that it's useful in making business decisions for people who are on the front line, whether they're assessing a mortgage or calculating the risk of insuring a property.
Great, thanks, Kate. And I'm sure Carl will agree that's a great segue into some of what he might be talking about in just a minute. So, Carl, you spend a lot of time bridging biodiversity research and the wider business world. So I'm interested to ask you, can you please tell us what you see in the business world around addressing biodiversity in core decision making and how the work of agencies like your own, Idea Group, and other research driven agencies can help businesses make decisions and mitigate biodiversity risk?
Yep. Thanks very much, Rachel, and thanks to everyone else on the panel and the key speakers, Brendan and Sarah. Yeah, it's given me a great platform to sort of talk to this question of how you might go about doing things and making these connections, because this challenge of integration across the disciplines and the various skill sets that people are bringing. I'd be coming from a perspective, accountants are the ones who are going to save the planet, not the lawyers or the investors, but you know, everyone's got a part to play. So I think the framing that I'd like to think, the way to come in this, I think in the connection to the business space, my background is more in the government sense and government measurement space, but more recently, the last 5-6 years has been looking at this connection to the business world. The language of risks and opportunities is clearly the way into the discussion, whether it's an investment or a legal or financial response is a very helpful way in. And our framing tends to be one of looking at natural capital and thinking of it, the challenge as being an asset management challenge. And so how do you work through that? What are the risks of that asset, and what does it mean for your business, and how might you impact on that? How can you invest in that asset to get a better return over time, essentially maximizing returns from natural capital? What we do know is that that's a type of decision that can't just be taken at a board level. It's going to be organisation wide. It's going to be at a site level, at a sort of more strategic level as well. So right through a business, there'll be different levels at which you want to take that type of decision, which means you need a whole variety of tools. And there's masses of tools out there to think about what the risks and dependencies, opportunities are for businesses about the links to natural capital. Some of them are more, say, water specific or climate specific or biodiversity specific. Some of them are sector based, but nonetheless, there's not a shortage of tools per se. So where I think the next challenge lies, and a lot of them have been around for quite some time, where I think where we're coming in at things is this integration challenge, and that's where the accounting language is the one we'd like to see as a way to take that step forward. Because it really is going to be a challenge, not just of telling the broad story about biodiversity, which Brendan conveyed both for the globe and for Australia, but how does that relate back to a particular site where a business has got an investment, whether it's an airport or a farm or something along those lines. So making that connection and understanding that the impacts on biodiversity vary depending on location is really a sort of fundamental way into the discussion. So you can't just have one strategy. It's probably going to have to be context dependent. And accounting can start to help play that role of trying to tell what is the balance sheet, what's the perspective at a particular local scale. The great thing is that over the past 10 years, that's where I've been working, is developing definitions, assets, income, linking biophysical information with financial data to tell that story at a micro and linking to a macro scale using accounting techniques and principles. So that we're getting very close, in actual fact, to having international accounting standards from more an official statistics point of view, but that they can be relayed to a corporate level that would allow then this exchange of perspectives across disciplines and trying to bring these things into real decision making. There's still some work to do to have those discussions, but that's really quite fundamental. I'd probably note as well, in order to make it real for businesses, I think what we'll need is targets. Now we know that in the climate discussions, we've got these global targets around what's required. There is now work in the science-based targets for nature, which is a global consortium of quite a large number of environmental and business groups to establish, connected to the work of the Convention on Biological Diversity and the next round of discussions on that, about how you might work on ways to link those global biodiversity objectives with something at a local level. But it's tricky. But there is active work at the moment. I think they should be fairly close to coming up with some first draft cuts of methods to be able to do these science-based targets that businesses can then apply and then use those to build their own strategies and actions. And I think for me, that's one of the challenges we have, is to move away from deciding these are the solutions, how do we implement them, to a language which is what are the opportunities and risks in a particular location, how can I do it, and what are the solutions that I could choose from. I think we too often turn to this is a solution you have to have, and as a result, people feel forced one way or another and end up not doing anything. So the final thing I'd say is one about developing this common language. How do we get these exchanges that are happening within a business, within a sector, within a country, across the private and public space, because managing these environmental outcomes is going to be a shared responsibility. You can save all the water you'd like in your catchment, but if it doesn't rain, that's not going to help you. So understanding these joint landscape scale type of connectivity and connections is fundamental. And yeah, really looking forward to being part of the discussion that can help take it forward, because this type of discussion is really fundamental. But I think we're closer than we think. But we really do need to think about, scaling it up and really getting a really broad conversation happening. Thanks.
Yeah, thanks, Carl. And there's actually been a couple of questions from our audience as well on sort of similar topics to what you just touched on, whether there are mechanisms for individual investors to be aware of their biodiversity risks, whether there are tools or metrics or other ways to assess impacts on biodiversity, and also the dependencies of businesses on biodiversity. And I think you started to answer that, but I'd like to just invite any of our other panelists to briefly comment on that question as well, either on specific metrics, or I think the broader question that Carl's just raised about, and that Simon raised as well, about that implementation gap and what we need to do to have those tools be made ready.
I'll have a go. Rachel, I guess I would agree with Carl that a lot of the a lot of the tools that we need in order to measure our impacts, measure the biodiversity or ecosystem risk that's been generated by a project or an investment, measure our progress towards targets. A lot of them exist. I think the problem is that we haven't had enough of these kinds of cross-sectoral discussions, and we don't have these cross-sectoral discussions daily in our workplaces. I'm in the ivory tower and scientists are stuck away at CSIRO, and you're in a bank and you're in a law firm, and often we're not really sharing our ideas and tools together on a daily basis. And in a way, I think that's what it takes. And so some of the places where this is working, I think perhaps are in the conservation meets agriculture space, where groups like TNC and Kilter Rural are getting together with scientists, and they are coming up with scientifically rigorous measurement and accounting methods that can help them understand and demonstrate their performance. But we've got to have a lot more of those cross-sectoral conversations, and the scientists and ecologists need to be sharing tools, but also listening to what really the problem is and what really the question is that insurance companies and law firms and banks are asking us. And I think, as Carl says, you can't give up a solution until you've really actually listened to what the problem is or what the question is. And so that's probably a good bit of wisdom from Carl there, one to the accountants.
Great. Thanks. So we have another question that I'd like to put to our panelists. So the IPBES calls for transformational change, as Brendan was saying right at the start. The question that has been asked is, how do we achieve this in well-positioned sectors like agriculture and finance? How do we scale this change quickly enough to address the problems? And what kinds of carrots and sticks, this was the question, there might be to help to make that happen. I think I might put that first to Simon.
I can have a crack from a finance sector perspective. I think there's probably lessons to learn from climate change and what we're seeing right now. And I think the carrot and the stick is the right approach. And at the moment, you've got most of the investment sector in Australia having to pay strong regard to climate change risk and manage climate change risks for three main reasons. One is because it's become a compliance issue. The regulator has said you must do it. We want to see how you're doing it, and if you're not, you are, this is a breach of. It's become a compliance issue, not a nice to have. Secondly, consumers are stating very clearly to their superannuation funds they want this to be considered in their way their retirement savings are invested. And thirdly, we've managed to demonstrate that if you manage climate change risks well, your investments will perform better. So you've sort of got these three great drivers. There's sort of the sticks and the carrots there. And I think there's probably lessons from that to apply elsewhere. I mean, I think the big systemic issues are obviously much greater for us to grapple with. Something that ASFI is trying to do and has been set up especially to do is to address system-wide failings and system-wide issues that the finance sector needs to come together as a sector to address, because none of us individually can address. So that is through a process of bringing together 130 people through multiple working groups and trying to write a report with that many contributors. I'm feeling like a scientist involved in some of these big global processes right now, where you have that many drafters of a report. It's really challenging, but I think it has to be done, and we have to convene groups of that scale to deal with big, broad systemic risks, or there's sort of first mover disadvantages otherwise, and the industry is not moving together, and these need to be considered at that level. And so I think that's our attempt currently as a financial services sector in Australia, to start addressing these in a systemic way. And that'll involve not just the government must do this for us, but it will also involve statements around what the industry can do, needs to pay more regard to. And so hopefully there'll be an industry stepping forward to move together more safely and to get the right information, to form the right alliances, which is what Brendan's just alluded to again here, these important conversations across different sectors that need to come together.
Maybe,
yeah.
Rachel, I might add something. I think that maybe one of the things in this sort of scaling up process is really to understand the roles of different players. Because I think it is easy for someone to come along with a message and say, this is what I think has to be done, and then sort of it goes away and it sort of fills the airwaves for a while, but it doesn't necessarily, and it's probably one part of the story, but not sufficient. And having involved not at the centre, but on the edge of some of the ASFI work, but also just thinking about how the sort of discussion around environmental policy, which is relatively new for me, it's not my background. I sense there's one thing we could do is work a little bit harder on understanding what roles different parts of the institutional system could play. So what is the role for federal government? What's the role for state governments? What's the role for local governments? What's the role for the finance sector? What's the role for different businesses? What's the role for academic institutions, for consultants? And I think if each part can play their role in a way that's sort of seen, and it's not other people telling other people what their role should be, but just recognising how those roles can intersect might be something to think about in terms of scaling it up. Because I'd like to think that we can move beyond impact investing, for example, that in actual fact, investing for environmental outcomes is not seen as just a nice thing to have on the side, but in actual fact, it's just a standard part of investment. And that's really the mindset from a natural capital point of view, is that natural capital is just another form of asset. It's a very important one, true. But if you try and think that, if you think of it as an impact investing, just think of it as investing. And it's how we get that sort of ongoing maturity in taking things forward and understanding different roles, I think is something that we need to work through.
Yeah, great. And Kate, I might turn to you now, because I think one of the questions that you and I have talked about has been about, the role that science can play and what the knowledge gap is from your perspective in terms of driving some of those more systemic changes in investment. Did you want to reflect on what it is that you think that that you need to know to be able to make those changes?
Good question. So I guess it's not what I need to know, but I think I've kind of got two examples in mind. One is the one that I mentioned earlier, which is carbon farming, obviously, and we know that carbon farming can work, and we know it can get financing, and we know it can have great benefits. But we also know, and the Carbon Market Institute presented on this last week, that one of the biggest obstacles to the carbon market in Australia is the way that it is viewed by banks in particular, across the board. And the challenge is that there aren't great, it's not that there aren't metrics on productivity, and it's not that there are metrics on productivity, but there isn't a great standardisation and understanding of value for the people who are valuing properties, which a loan might get assessed against. So there's this understanding, or this better consensus required of what the value is. And so I'm so sorry, a fire truck is just going to another place. It had to happen. So there's this, I guess, understanding of whether it's a value add or it's a reduction in productivity, and what that trade-off is for carbon farming. Another really good example was a briefing I was on earlier today, and a gentleman from Jigsaw Farming talked about going to a regenerative farming system, and he's one of the MLA's first livestock producers to get on the carbon neutral 2030 program there. And he's saying, like, the increase in biodiversity on his farm since he's switched his farming over has increased. But I think it's really interesting to think about whether biodiversity improves the productivity of the farm generally. Now, I'm sure it does. There's lots of evidence to suggest it, but there's not that real conversion of what is often seen as anecdotal evidence into a productivity assessment. And I think that's where there's a bit of a sticking point at the moment in converting what we know is probably right into hard, cold cash kind of assumptions that people who might not necessarily be driven by altruism, but are the people who are making the decisions whether to finance these businesses are making.
Yeah, great. Thank you. And we might come back on some of those questions in just a moment, but before I want to get to a couple more questions. Sarah, there's been a question put to you, and maybe some of our finance sector people would like to comment on this as well, whether there are mechanisms at the moment for individual investors to be made aware of the biodiversity risks in their portfolios. So, for example, something like the impacts of individual stocks on ASX on biodiversity, basically, those kind of mechanisms. Or I think the answer is, you know, how would we get to those mechanisms?
Yeah, the mechanisms are not uniform or universal or well developed like they are becoming in relation to climate change. The suggestion I would make for an individual member is to ask. Because as a trustee of a superannuation fund, the one thing we look at is member requests. And the super fund I'm a director of, we've got 140,000 members. If we get a request from 6 members, that is an avalanche of member concern, because people are so disengaged with their super. So I can guarantee you that the best way that you can actually ask your super fund to itself be asking the questions of investee companies and be thinking about these issues is to ask them. It will have impact.
That's great. Yeah, Brendan.
I just wanted to reinforce Sarah's point there, and this is just something that I heard today from someone who's going to be participating in a future webinar, is that a recent survey by a large superannuation company of its members asking what their priorities were revealed very strongly that the top priority, unbelievably to me, was around improving performance with respect to environment and biodiversity. And so we'll probably hear more about that in a future webinar, but I was really surprised by that answer. And maybe that was an avalanche of 6 requests, or maybe, but I get the feeling that this company actually sent out the questionnaire, asked the question and got the surprising answers back.
Yeah, great. All right, so I'm mindful of time and that we need to wind up for some of our guests who might need to end for the day. I'm going to ask, so we're going to pop a couple of links in our chat, one to the rest of the webinar series for people who have to leave early. Do click on that link and bookmark it so that you can sign into the other webinars. I'll say a bit more about that in just a moment. And also a link to a feedback form, which we would like you, if you've got a moment now, to think about filling in and just giving us some of your thoughts about what you would like to hear more about what was most useful about what you heard today. While we pop those links in, I am going to call one last question, and I think I'm going to call it open for the panel. It has been partly answered in the Q&A chat, but I do want to raise it for this panel as a whole. So the IPBES report calls for transitions away from economic models of perpetual growth to circular and sustainable models. So do the ideas that are being talked about here support such a transition, and are there smaller changes that we can make along the way while encouraging that kind of circular economy? Is there anyone who is brave enough to get their teeth into that as a final series of comments that we might take from our panel?
I'm happy to, if you need, Rachel.
Absolutely, please, Sarah.
The catalyst of my conversion from corporate lawyer to environmental corporate lawyer was very much around the idea of one planet and global footprints, and realising the fact that, you know, we only have such limited biocapacity available, and that from a mathematical sustainability point of view, we can't go on consuming 2 planets worth of resources. We're living off our planet tree principle, not our interests. So for me, tying together some of the comments that other panelists have made, the key really is to make sure that we do have a quantitative base, and to be able to say to investors, to companies, like we now have with climate change, net zero by 2050. So that gets rid of the issues with tragedy of the horizon and tragedy of the commons. And I think we need the same with biodiversity. Not only do we need zero more biodiversity loss, we actually need regeneration. And so I think if we had a target that really communicates that as clearly as we have had post the Paris Agreement with climate change, I think that is the one key to making the financial system, the real economy, align with that ecological reality that we face.
I'll have a quick go. Certainly the link with the IPBES and the changed way of thinking about it. From what's been fascinating for me from an accounting point of view is to actually see that accounting is a way in which you can reflect a nested systems way of thinking, in which people sit within a society, or economies sit within a society, and are ultimately dependent on the environment in which they live. And so this way, as a tool to be able to somehow put some sense of a common performance about how we're going with respect to the planet. Sometimes I think there is a need for us to be a little bit more coordinated on our stories about what's happening with Planet A. From the scientific literature that we do have quite a lot of different planets that we're on, because the perspectives can be sort of happening at a micro level, between the macro level, and how you tell the story that's holistic. We've sort of got there with climate and the link to carbon, but I think with biodiversity there's a need to tell this sort of consistent narrative. But I would also encourage us to think not just about the assets, but also about the benefits. And I thought Brendan's slide there about nature's contributions to people, that whole notion of ecosystem services, telling the story about the link between the assets and the flows that you get from it. Kate put it slightly differently, or a different context in terms of land valuations and the cash flow story. But that's a reality. We need to think of both the asset and the benefits we get from it in order to be able to tell that integrated story about where we can go. And so I think it's possible. It's certainly possible. We're all framing it slightly differently, but it's probably more similar than we think.
Terrific. Well, we might end on that note, and thank you, everyone. We're going to open up the chat now so that people in the audience can share their final thoughts, if you can hang around and do that. We also, apologies that we couldn't get to all of your questions, but we're hoping to send around a resources pack which will include a response to frequently asked questions on this webinar, so that everyone will receive those email links and you'll be able to dive into those additional resources and see if your questions were can can be answered there in more detail. But please do jump in on the chat and start sharing your thoughts if you can hang around, and do go and fill that feedback in form right now if you have a chance. It will help shape how we and others working in this space might be able to present more information in future, and how we might come to you know, closer conversations between our various sectors in research, in business, and also more broadly. So doing all those things can help to enrich our collective conversation, I think. I just wanted to say one final thing, which is a final plug for our next 3 webinars. So as has been alluded to, we have 3 webinars coming up. It's the same time every week, beginning 4:30 Australian Eastern Standard Time on Tuesdays. Next week's webinar will be looking at the value of nature in cities. The following week we'll be looking at the value of nature in agricultural landscapes and tools from science and economics for valuing nature in those contexts. And the third webinar on the 4th of August will be measuring impact and assessing performance tools for business decisions. So some of the issues that were raised here today, we hope will be picked up and discussed in more depth in all of those webinars. So please do join us, go to the link and register so that you make sure, even if you can't join us on the day, that you get the information and the chance to follow up on slides and resources packs and other things. But thank you all for joining us, and thanks once again to all of our panellists, Simon O'Connor, Kate McHugh, Carl Obst, and Sarah Barker and Brendan Wintle. Thanks everyone, and we'll see you next week.